The $30,000 asset write-off. What is this and what does it mean for your small business? I'm Sam Keats from Keats Accounting, and this week's tax tip is for businesses who want to take advantage of the small business asset write-off. We've done a previous topic on this where we've talked about the $20,000 asset write-off, and the principles of this are going to stay the same. So essentially, if you're an eligible small business, you can buy a piece of equipment for use in your business for up to $20,000 plus GST if you're registered per item, and you can claim an immediate tax deduction. So that means that instead of having to write off the piece of equipment that you've purchased over a number of years, you get a tax deduction up front. It reduces your business profit by the amount that you've spent, and it means that you pay a lot less tax in the year where you've actually incurred the expense. There are a couple of tricks to this. It doesn't matter if you finance the asset, that's the most important thing. Second thing, it's per item. So you could buy multiple items, and as long as they're below the asset write-off limit, all are deductible. The asset must be installed ready for use. So if you order a car, you don't actually get to claim the deduction until it's delivered and available for you to start driving it. But there's been a couple of recent changes. So the first change happened in January, where we had an announcement from the Treasurer that the threshold was being lifted from $20,000 to $25,000. Then on budget night it got lifted again, and it's now $30,000, and it will run until the 30th of June next year. So you've got at least a full 12 months to be able to access this concession. Yes, maybe next year on budget night we'll find out if it's extended again, but for the moment, if you purchase an asset for your business up to $30,000, you get an immediate tax deduction. So what happens if you buy a car and it's $35,000? Well, unfortunately, it doesn't mean you can claim the first $30,000 and write off the rest as depreciation over the next few years. It's either in or out. If you don't meet the criteria and you can't claim the $30,000 asset write-off immediately because the item costs more than that, then we're back to standard depreciation rules, 15% in the first year, 30% every year after that. So before you're looking to make any of these purchases, please give us a call and talk us through how it's going to work for your business. Sometimes a couple of little tweaks are all it takes to make sure that you can save $10,000 in or more in tax. Always happy to help. So please give us a call if you're planning any asset purchase, and we can guide you through when the best time will be for you to do that for your business.